Welcome to the Deep Dive. Today we're diving into Hungary's Guest Investor Program. The GIP, you can think of it as a strategic doorway to the EU. It seems to offer a real path for global mobility, maybe some long-term security too.
Definitely.
And to really get into it, we're drawing from Unlocking Hungary's Guest Investor Program by Dr. Pooyan Ghamari. He's got this great background, Swiss economist, founder of A-Land, expertise in real estate, digital transformation, and crucially, investment migration.
Right. His insights are pretty valuable here.
So our mission today really is to pull out the essential stuff about this program. We want to focus on its strategic value, how it actually works, and what makes it stand out, especially if you're looking to get up to speed quickly and thoroughly.
And what's quite interesting, as Dr. Ghamari points out, is how thoughtfully structured Hungary's GIP seems to be. It's not, let's say, just another residency by investment scheme off the shelf. It feels positioned more strategically, kind of linking different parts of Europe. And the way the investment is channeled through these specific funds, that's really key to its unique approach.
Okay, let's unpack that core mechanism then. So the program basically pushes investment into real estate funds that have the Hungarian government's official stamp of approval.
Exactly. And as of right now, May 2025, there are 2 of these authorized funds available.
Just 2?
Just 2, officially approved for now. The first one is the SPRINT Hungary Real Estate Development and Investment Fund. It got its approval back in October 2024. The manager is SPRINT Asset Hungaria Zert. And structurally, it's a closed-end fund.
Closed-end. Meaning what exactly for an investor?
Well, typically it means there's a set period for investment, and you usually can't just pull your money out easily before the fund's term is up. It's built for longer-term appreciation.
Makes sense. And its focus?
Primarily the residential property sector in Hungary. So think renovation projects, maybe new developments, aiming for that long-term asset growth.
And I saw there are some specific details mentioned about fees for Sprint.
Yes, there are. There's a 2.5% annual management fee. Then you have administrative charges, which could go over 65,000 euro, and a 5,000 entry commission as well.
Okay.
And one other quite specific point, an eligibility restriction. They generally don't accept citizens from Russia, Belarus, Ukraine, the U.S., and Israel.
Really?
Unless, and this is the key, unless those applicants also hold dual nationality from a country that is eligible.
Interesting caveat. So that's Sprint's right. What's the second option?
The second one is the Gravitas Hungary Real Estate Fund. It got the green light in January 2025.
More recent then?
Yes, managed by Granite Alapkazol. And this one's different. It's an open-end fund.
Open-end, so potentially more liquid?
Generally, yes. It often allows investors to buy and sell shares more frequently, though you'd still need to dig into the specific exit strategy and details. Their focus: modern residential properties, mainly for long-term lease. They emphasize a portfolio-driven approach to managing risk.
And the fees for Gravitas, are these similar?
Well, this is where Dr. Ghamari flags the need for some serious due diligence. At the time he wrote his analysis, the fees for Gravitas weren't publicly disclosed.
Oh, okay.
So that's a really crucial point for anyone considering it. You absolutely need to work with advisors to get clarity on the full cost picture there.
Right. And you mentioned only 2 were approved now. Our source notes others might be in the pipeline, but these are the only legitimate ones currently.
Correct. And vitally, both Sprint and Gravitas have been thoroughly vetted by the Hungarian National Bank, the MNB.
The MNB, Hungary's financial watchdog, basically.
Exactly. They ensure these funds meet standards for regulatory integrity, financial transparency, and, importantly, that they actually align with Hungary's national housing policy goals. They're checking if it's all legitimate and above board.
Which naturally leads to the question, why this focus specifically on funds? Why not just let people buy, say, an apartment directly to qualify?
That's a great question, and there's a pretty clear economic rationale from the government side, as highlighted in the source.
Okay, so what was the thinking there? What are they trying to achieve?
Well, a few things. Firstly, channeling investment through funds means the money goes into diversified portfolios, not just single properties one by one. This helps reduce the risk of creating speculative bubbles in certain areas of the housing market.
Avoids ghost apartments too, perhaps.
Potentially, yes. It also offers greater transparency and accountability. It's easier to monitor compliance, especially anti-money laundering checks, when it's managed through these regulated fund structures.
Right.
And then there's the professional management aspect. These funds have dedicated teams, and they're subject to rigorous oversight by an independent custodian.
A custodian, like a guardian.
Sort of, yeah. Often it's a major Hungarian bank. Their job is to watch over the fund's assets, make sure the manager's following the rules, and ultimately protect the investor's interests.
Okay, that makes sense from the government's perspective. Risk mitigation, transparency, control.
Yeah.
But what about for you, the investor? What are the upsides of this fund route?
Well, for you, the investor, it means getting exposure to a wider range of properties. That inherently spreads your risk compared to, sinking all your capital into one specific building.
That's concentration risk.
Precisely. There's also the potential for better liquidity compared to trying to sell a physical property yourself, though, and that depends on the fund specifics. And you get the benefit of professional management experienced people handling the investments.
Plus economies of scale, I imagine.
Exactly. These funds can often access prime assets or development opportunities that might be harder for an individual investor to find or afford. And there's a certain security that comes from investing in a government-licensed, heavily regulated structure.
And Dr. Ghamari really stresses how this fund-based model sets Hungary's GIP apart from some, let's say, less regulated golden visa schemes out there. It shows Hungary's trying to balance investor interest with broader economic health.
Absolutely. They seem focused on fostering a healthy housing sector and achieving stable economic growth, not just attracting quick capital.
Okay, so if we dig into the program's requirements, what are the key things investors need to know?
Right, so the minimum investment threshold is $250,000. That needs to be invested in the certificates of one of these approved funds.
$250K, how does that stack up?
It's actually quite competitive when you look across Europe at similar residency by investment programs. But it's not just about the initial sum. There's a significant 5-year holding requirement for those fund certificates.
5 years. That feels like a solid commitment. What's the strategy behind that duration?
It's very much designed to discourage short-term speculation. It aligns your interests as the investor more closely with the long-term goals of the program and, importantly, the actual performance of the fund you've chosen.
So it encourages genuine investment, not just flipping a permit.
That seems to be the intent. Then there are rules about what the funds themselves can invest in. At least 40% of each fund's assets must be in Hungarian residential real estate.
Ensuring a direct impact locally.
Exactly. It guarantees that a significant chunk of the capital flows directly into the country's housing sector, supporting the real economy.
And the oversight we touched on earlier, it seems quite layered.
Very much so. Fund managers, as we said, need that MNB license. They also need either a security certificate or to be registered with the Constitution Protection Office, serious vetting.
Right.
And then you have that independent custodian, usually a big bank, constantly monitoring compliance and acting as a safeguard for investor interests.
And transparency, AML checks.
Huge emphasis on that. You'll need comprehensive documentation, proving the source of your funds, verifying your identity, ensuring the legality of the capital flow. It's stringent.
Okay, so beyond just getting the residency permit for Hungary itself, what's the bigger strategic value here? What does this unlock for someone?
This is where it gets really compelling. The advantages go way beyond just having a Hungarian residency card. First off, you get unrestricted mobility within the Schengen area.
So visa-free travel across most of Europe.
Exactly. Travel, live, conduct business across Schengen countries without needing separate visas. That's huge. Then there's family security. The program allows you to include your spouse, your minor children, and even dependent parents in your application.
Bringing the whole family along.
Yes. And another major point, which you touched on, is the lack of a mandatory physical residency requirement to maintain the GIP permit itself.
That sounds incredibly useful for globally active people.
It really is. Unlike many other programs, you don't have to actually live in Hungary for a minimum number of days each year just to keep your guest investor status valid. This offers tremendous flexibility for international entrepreneurs, professionals, people with lives spanning multiple countries.
But there's a pathway to citizenship eventually, right? How does that work with the residency aspect?
Yes, there is. After 8 years of continuous physical residence in Hungary, and that's the crucial distinction here, you actually have to live there continuously. For this part, you become eligible to apply for Hungarian citizenship.
So the GIP permit itself doesn't require living there, but the citizenship path does.
Precisely. It's an important difference. But if you do meet that residency requirement, Hungarian citizenship opens the door to full European Union rights.
And looking at it financially, Dr. Ghamari points to diversification and wealth preservation, too.
Absolutely. Investing in EU real estate via these regulated funds lets you anchor part of your portfolio in a stable legal environment denominated in a strong currency. It acts as a hedge, against potential economic volatility or risks back in your home country.
Okay, it sounds comprehensive.
Yeah.
So if someone listening is thinking, this might be for me, what does the actual application journey look like? Broad strokes.
Well, it usually starts with a pre-qualification check. An experienced advisor would assess your eligibility based on your circumstances.
Makes sense. Then what?
Then comes choosing the fund SPRINT or Gravitas currently. You'd need to weigh up their approval status, track record if available, those fee structures we discussed, and their specific investment strategy. See which aligns best with your goals.
Due diligence is key there, especially with the Gravitas fees being less public.
Absolutely. Next is gathering all the paperwork. Financial records, legal documents, ID proofs, health insurance. It can be quite extensive.
I bet.
Then executing the actual €250,000 investment. This needs to be done securely, typically with lawyers and the fund administrators involved to ensure compliance. After the investment is confirmed, you apply for the guest investor residence permit itself.
Where do you apply?
Usually at a Hungarian consulate in your home country or country of residence, or possibly an immigration office if you're already legally in Hungary. And then it's about maintaining compliance, adhering to the rules, keeping the investment for the required period, and tracking how your chosen fund is performing.
Sounds like a process with several steps. Are there common traps or mistakes people should watch out for?
Definitely. A big one is relying on unlicensed brokers or intermediaries. Dr. Ghamari stresses verifying anyone you work with through official Hungarian channels. Don't just trust a website.
Good advice. What else?
Overlooking hidden costs or not getting full clarity on exit options from the fund. Again, that gravitas fee situation highlights the need to ask detailed questions. And finally, failing to properly document the legal origin of your investment funds. That can cause major delays or even rejection.
Right. This really seems to highlight that it's not a DIY project. Professional help sounds almost essential.
Oh, absolutely. I wouldn't recommend trying to navigate this alone. Experienced lawyers and advisors specializing in investment migration bring so much to the table.
Like what specifically?
Well, they start with that crucial eligibility analysis, considering nationality rules like sprints, figuring out the best way to include family members. They perform deep due diligence on the funds, scrutinizing the details beyond the marketing materials.
Helping you choose wisely.
Exactly. Then they manage the document preparation. It's complex, involving Hungarian and EU requirements, translations, certifications. They oversee the investment execution, ensuring it's done securely and compliantly. They handle the residency application itself, liaising with authorities, troubleshooting any issues.
And it doesn't stop once you get the permit.
No. Good advisors offer ongoing monitoring. They ensure you stay compliant with the rules over the 5 years and beyond. Plus, they can provide crucial advice on wider planning tax implications, long-term settlement strategies, and, critically, clarifying that continuous physical residency requirement if EU citizenship is your ultimate goal.
So the value proposition is really about avoiding costly mistakes, saving time, and gaining, frankly, peace of mind through a complex process.
Precisely that. It's about leveraging their expertise, their local knowledge, and their experience to navigate the system effectively and securely.
Okay, let's zoom out again for a moment. Thinking bigger picture, what makes Hungary and this specific GIP potentially attractive from a strategic standpoint?
Well, Hungary itself occupies a unique position, doesn't it? It's often seen as a crossroads between Western and Eastern Europe, geographically and culturally. The country generally offers a stable political climate, has pro-business policies, and a transparent legal framework which investors value. And this specific fund-based investment model means your capital is protected by law and is working within a growing EU economy.
And the flexibility.
That's a major draw. The flexibility of not having to live there to maintain the GIP permit, combined with a clear, attainable citizenship path if you choose to meet the 8-year physical residency requirement later on. That combination is quite powerful.
So in today's world...
Look, in a world with shifting geopolitics and increasing regulations everywhere, having a foothold like this in the EU through a well-structured program like Hungary's GIP can be seen as a prudent hedge, a strategic move for the future.
So if we were to boil it down for someone listening, what are the absolute key takeaways about Hungary's GIP?
I think the main thing is that it's a credible, quite well-structured and relatively adaptable platform for securing EU residency with that potential citizenship pathway down the line. It's legitimate, but success really hinges on clarity. Understanding your own goals, yes, but also understanding the program's nuances. Partnering with the right experienced advisors is non-negotiable. You need to look beyond just the surface-level pitch.
And Dr. Ghamari's work, the source we used, emphasizes that need for expert guidance.
Yes, and his platform, Aland, is positioned to help investors with that, offering referrals, guidance, strategy sessions. Ultimately, though, it's about you, the listener, considering what you value most in terms of global mobility and wealth management, and seeing if the GIP aligns strategically with those personal goals.
Right. So wrapping up our deep dive today, the key strengths really seem to be that investment focus on regulated funds, the valuable Schengen mobility it unlocks, that significant plus of no mandatory physical residency needed just to keep the permit, and then the defined, albeit demanding, path to EU citizenship after 8 years of actually living there.
Absolutely, and perhaps that leaves you with a final thought to mull over. In the current global landscape, what does security really mean for your future, for your family's future? And how might strategically planning for international residency, perhaps through a program like this, play a role in building that security? It's certainly worth exploring how these opportunities might fit into your own unique situation and long-term aspirations.